Hey guys, so in this video we will be discussing about break of structure. Okay, I hope you watched the first video. So this is the second video, and here we will be discussing about change in structure only. Okay, so two things should be taught here: order block and change in structure. But I thought order block, a separate video on order block would be better. And in that video we will be also discussing about how to mark the POI. Okay, so in this video we will be looking at how a structure is broken and also how a change in structure is likely to happen. Okay, so this PDF I will be sharing with you. Okay, so uh, we have identified how to realize the three trends. Okay, so for an uptrend it will be like low, high, lower high, higher high, lower high, higher high, and the trend is likely to continue until any of these things are taken out. Okay, so imagine, let me just draw it a little bit big. Okay, so imagine if if an impulsive move broke this lower high. Okay, if it broke this lower high, then can we confirm that the trend is changed to downtrend? No. Okay, so we need to have a confirmation. The confirmation would be an corrective move followed by another break of structure. Okay, a corrective move followed by another break of structure would actually define the change of trend to a downtrend. Okay, so here in this part, in the first part, we have low, high, higher low, higher high, higher low, higher high, and then broke here. Okay, so if it broke, then this would be high, low, higher low, sorry, lower high, lower low. Okay, so similarly we can see that the trend is likely to change to downtrend. Okay, and then we can actually go for short position. So the next thing is okay, so again an uptrend, high, low, higher low, higher high, higher low, higher high, higher low, and then failed to form a high. Okay, for an uptrend it should break this structure, it should break this high and go up, but it failed to form a high and then broke this structure. Here it broke this structure, formed a corrective move, and then again broke this structure. Okay, so here it broke two structure. Suppose the first it broke this structure and second it broke this structure. Okay, so now my bias would be downtrend. Okay, okay, not this structure, this structure. Okay, so now my bias would be downtrend, and the difference between these two is that the market first failed to form a new high. Okay, here the market failed to form a new high. Here it didn't, there was no fail to form a new high, it only break the structure at once. Okay, so when it failed to form a new high, we can actually assume that the there is a decrease in demand. Okay, so many people are not buying, the buying orders have decreased and more selling orders are pushing it. Okay, so the third thing would be just the opposite, which is in a downtrend move. Imagine this is a downtrend, low, high, lower high, sorry, higher low, lower low, higher low, lower low, break. Okay, so this is actually a breakout structure, but does it confirm that the uptrend is likely to come? No, we need to actually wait for retrace or a corrective move and then again a breakout structure. Okay, then only we can actually confirm that the trend is changed and uptrend is likely to come. Okay, so the second part, low, high, lower high, lower low, lower high, lower low, lower high, failed to form a new low, broke the first structure, retraced or corrected, broke the second structure. Okay, So this is another example for change in structure to from downtrend to uptrend. Okay, I hope you are actually understood these two structures. Two structure meaning two types structure for uptrend to downtrend and downtrend to uptrend. Okay, so this is our fail to form a new low. Okay, why this is significant is that the market was pushing downwards and then at some point it failed to form a new low, meaning buyers started kicking in. Okay, so here it failed to form a new high, meaning the sellers started kicking in. Okay, so now we will be discussing on the sideways. So imagine a stock is moving up, 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 and then equal low, equal high, equal low, equal high, break. Okay, so does this confirm that the uptrend is likely to come? No. We need to wait for a corrective move, then again a breakout structure. Okay, why do I say that we need a corrective move or a second breakout structure? Because then only the pattern or the first thing basics I taught you will get defined. So for example, for a downtrend there should be a low, high, low, higher low, lower low. Okay, so these patterns should form. And okay, let's see the case for a uptrend here. So it will be a downtrend, and then maybe sideways, broke, retraced, again broke. Okay, so this will be the point where I will be taking an entry, sorry, where I will confirm that the structure is broken and changed to an uptrend. Okay, taking an entry and an exit will be on the next part of video. So here we'll only be discussing on the structure changes. Okay, so in sometimes the structure may really confuse us, like maybe it can happen like this. Okay, so these can happen, but uh, what you need to focus is that avoid these things. Okay, only focus on the end point. So this will be an equal high and an equal low. Okay, until this equal high or equal low is taken off, do not take an entry. All those things that happen in between them, avoid. Okay, and maybe one more structure. Okay, so this sometimes these things can happen. An uptrend will likely to occur, and then a sideways market. Okay, sideways, and then breakout structure, then again the market may push upwards. Okay, so here we'll get two breakout structure. The first breakout structure will be on the downside and the second breakout structure will be on the upside. Okay, so this breakout structure is not actually a breakout structure, this is actually a liquidity graph which we will be discussing later. Okay, I hope you understood this much, and we'll be moving on to the real chart so that you get a clearer idea. Okay, thank you. Okay guys, so let's see. So I have taken Nifty futures here. Now in this part we can actually see that the market was kind of ranging, making equal highs and equal lows, and then at this point it broke structure. Okay, so today it broke structure. I don't know when you will be watching the video, but it broke structure. So this will be my breakout structure point. Okay, and now my bias is uptrend. Okay, now why my bias is uptrend? Because as you can see that the market was actually trending for a period of time, and then again it stopped in order to accumulate or reaccumulate positions, and then it broke structure. Okay, so I have a template here, so I will be marking this as my breakout structure. Now, so let's go to the lower time frame, 5-minute time frame. Here what you can actually analyze is that market gap up and then formed this ranging market, then started pushing down, covered the gap, and then broke structure here, retraced back, broke structure, retraced, broke, retraced, broke, retraced, broke, and similarly went down. Okay, so this is clearly a down uptrend. Okay, now if I'm taking another example, okay, so here also uptrend, consolidation or sideways market broke. Okay, so now when the structure is broken, the trend is likely to come, which will be uptrend in this path. Okay, so here as you can see, the market has been ranging for a longer period of time. Okay, which you can actually confirm by equal highs and equal lows, equal high, equal high, equal low. Okay, so we can actually confirm that in a 15-minute time frame that the market is actually ranging. Now, any other example? Let me see. Okay guys, so here is an example for downtrend. So this is the high, low, lower high, lower low, maybe here, lower high, lower low, lower low, broke structure, corrects to form a new low, then broke again. So it's clearly a uptrend coming up. Okay, because this was the first breakout structure and this was the second breakout structure. So we can actually confirm that an uptrend is likely to come, and then as you can see, an uptrend was come. Okay, so this is how you identify breakout structure and change in trend. Okay, so let's see. So from this part you can actually see that the market was kind of moving in a uptrend, and then from this part onwards it's actually was in a sideways trend until it broke structure here, then again went up. Okay, went up meaning that it doesn't mean an uptrend is likely to come, it means that it just went up in order to form a corrective move, then again broke structure. Okay, here two breakout structure, first one being at this area, second one being at this area. Okay, and then a downtrend is likely to happen. So this is how you identify breakout structure. I hope you're clear with this video. So if you have any doubts, please do post it in the comments. And if you okay, so this from this video you might have gotten a little bit understanding of how a change of structure happens and also how you can identify breakout structure. Okay, so what I want you guys to do is comment down some stocks, okay, name of stocks, and I will give you a video maybe on the next day where you can actually where I can actually show you the breakout structure and change of structure from the stocks which you posted on the comment section. Okay, so if you like this video, do share this video to your friends, because there will be a lot of lectures on this, lot of series based on institutional trading. Okay, thank you.